On today's Hot Sheet, I'm discussing housing inventory, home insurance rates, and an FOMC preview. It is Fed week after all. Today is Monday, June 16, 2025. I am Byron Lazine, and the Hot Sheet starts now. Live from Connecticut. Let's welcome into another week of the Hot Sheet. We're going to be Monday through Wednesday this week. Thursday, federal holiday. Markets are closed. We run the Hot Sheet every day. The markets are open Monday through Thursday. It's the only 24-hour look back on housing for real estate professionals. Share the Hot Sheet. Share the BAM YouTube channel. Somebody who can benefit from it. Best way to support BAM YouTube is just clicking subscribe notifications so you don't miss anything right down below. It's free. It's simple. It's easy. It's painless. Let me know in the live chat which market you're tuning in from here on this Monday kickoff. As we do on Mondays, we're going to look at inventory over the last week. We've also got home insurance, a real risk, according to Zillow. How big of a risk could it be for homeowners? And then what's the Fed going to do this week? It is Fed week, so a lot to go through. Before I get there, though, I want to just mention two major events on the horizon for BAM. First one is free virtual event in July. It's BAM BBQ. Haley, what is the, let me find it. I've got it here. I think I've got it. Yeah, there we go. It's BAMBBQ.live. Okay. BAM Barbecue is just being announced now. So this is the first I've mentioned it anywhere. So you're going to be the first to see it. BAM BBQ, free virtual event. It's the third virtual event of the year. It's happening July 16th. It's a Wednesday. Noon to 2 p.m. Eastern, 9 to 11 a.m. Pacific time. And look at this lineup. Myself and Eric, the broke agent, are going to be moderating the heat. And we have three major CEOs in the industry here. We've got Ryan Serhant from Serhant. We got Leo Perea from EXP. By the way, I got an interview with Leo, a little one-on-one interview dropping Wednesday here on the channel. And then we have Scott Harris, who's the experience.com CEO. So experience.com outside the industry. I'm sorry. So two inside the industry, one outside. So three CEOs just completely bringing the heat here. We're going to be talking about the state of industry with Leo, branding and selling in a tech-enabled real estate business with Ryan. And then Scott's got an AI presentation, how it's changing the way agents win online. Scott Harris, he's got all kinds of experience on all the profiles. How do you show up in search? Well, the search world's changing. He's got the playbook to change from search to AI. And you're going to want to check this event out. BAM BBQ, you know our virtual events have the entertainment factor. BAMBBQ.live. That's a free sign up. Links down below, and you can register now for that to save your spot. Also, the second big event. This is going to be the only in-person event of the year. Okay, so for those of you waiting for BAM Mania, that's going to be Q1, 2026. But BAM Camp in Arizona, Scottsdale, Arizona, is September 24th. Okay. There's already half of the mid-tier tickets have already sold out. We released this to BAMX members first, and now we're announcing it publicly. BAM Camp, September 24th, Scottsdale. So if you're local to Arizona, this is a one-day event. If you're local or you want to come into Scottsdale, Scottsdale is incredible. Restaurants are fantastic. Shout out to the Monarch. Just absolutely love it there. Golf, all that kind of stuff would be beautiful in September. This is where you're going to want to be. Scottsdale. Again, this mid-level, the mastermind, the lunch, the main event, that's already halfway gone. You can get in on the half main event or there's VIP tickets remaining as well. So bamcamp.live if you're coming to Arizona, September 24th. Those are the two events. All right, the big event of the week, every Monday, the big event for us here on the hot sheet is what's going on with inventory. Okay, inventory for the week really took a significant recovery from where we were. Not recovery is the wrong word, but back on the trajectory from what happened last week. Before last week, I'm seeing a trajectory that I was all but guaranteeing 900 plus thousand on active single family inventory as as collected by Altos Research. And then we kind of had a little slowdown last week. And it's like, oh, is kind of where the rates are hanging going to create another pause for sellers as we look at it across the country? Are they going to hold back? Is it going to lock up some more of the inventory? Well, the past week we saw that momentum pick back up. Inventory goes from 808,000 single family across the country to 825,000 plus, nearing 826K. Inventory up 33% year over year. Here's the interesting thing, okay? In 2024, we saw inventory increase. It was on the increase the entire summer and all the way to the second of last week of October, where we hit our peak at 739,000. The last week of October was 737,000. So really till the end of October last year, 2024, inventory single family was continuing to increase, and we hit our peak the second to last week of October 2024. Now, that's different than most years. Most years, September, like a normal year in 2019, come September, you start the decline, that seasonal end of the year decline on inventory. Okay. Now, here's the thing. October of the second to last week of October in 2019, 929,000. We're within 100,000 of that. If we were to increase for the entire summer like we did last year into October, do you think we get another 100,000? I mean, it is about as safe as bet as you can make based on what inventory. Just think about this. March, we were in the 600, the under 650,000 in March. We've been on the straight decline. That's seasonal expected. But if we continue to increase as we did through the summer last year, I think north of 900,000, it's only 75,000 away, is all but a guarantee. We might get to 1 million here going into next year on active inventory. I think that depends on where the rates go. But here's the thing. Single family inventory has really increased, really improved. There are places where it's improved more than others. Sunbelt states, Southwest Florida, Texas, Austin, parts of Arizona. It puts downward pressure on prices. It puts a longer DOM into the equation for sellers. 900,000 is a real possibility either this summer or into the fall on single family. Realtor.com reported we're over 1 million. That includes all property types. So some of these traditional normalized market benchmarks on inventory, they're being hit this year. And we're tracking towards another big one here on single family, 825,000. Same time last year, we were at 620,000. This is a completely different market across the country that we're dealing with on inventory. There's pockets in the Northeast that are still dealing, obviously, with low levels of inventory, but there's a lot of parts of the country, most of the Sun Belt, most of the West is really dealing with a buyer's market now. The strategies, the conversations, they've flipped. A lot of sellers haven't flipped with it. And that's the real estate professional's job, to go deep on that education. Just because they want aspirational pricing doesn't mean yesterday's price is what July and August are going to bring here in the summer of 25. New listings. These are the sellers that need this education the most. We had an improvement here last week off of last week's numbers, 78,000 versus 71,000 same week last year. Remember, last week was 73,000, so we were down on the momentum on inventory accumulation last week. Kind of dipped a little bit on new single-family listings. New listings obviously was one of the reasons why we saw that inventory number grow. Still not into the north of 80,000, but pretty close. As we look at new single family listings, summertime, next couple weeks, getting up over 80,000, like we did in 2022, even over 90,000 there, is something that you would expect in a normal market. And we'll just kind of see what happens here as we get into next week. 39.5% of sellers are still reducing price. So percent of properties with recent price reduction, about a third of properties will reduce before they sell. We're at 39.5%. That's over each of the last 3 years. Last year's number came in at 36.5. So serious sellers on the market are reducing at a higher clip than they have in recent years. And that is to be expected as more inventory comes on the market if they are a serious seller. We are seeing more serious buyers than we saw last year, about 10,000 more total pending home sales in contract. And we will see a decline on this number as we move forward throughout the summer, throughout the fall, and certainly into the rest of the year. So we are at peak or just below peak on total pending home sales, 405,000 versus the 395 last year. Still nowhere near where we need to be to get back to a normalized market on pending home sales. But it does show you that as if rates were to move down, and Gary's talking about loan applications, Gary Ashton from Nashville. I'm gonna mention loan applications here in a second. But if rates were to move down, these numbers go up dramatically. The loan applications support that. The future is bright. If you're educating a buyer right now, what future competition is going to look like, mortgage applications is an indication of that. And this shows you how the future, can really be bright in consideration of rates coming down. Rates still elevated. It's 72,000 weekly pending sales for 69,000 the same week last year. This number is trending up right now from 69,000. So good sign there that we're going to, potentially finish this year pretty strong in comparison to kind of where we could have been with 7% rates. So here we go on the mortgage application data that Gary was mentioning here. We've had 11 positive readings for the year, and we've had 8 negative, 3 flat. Here's the big one, 20. This says 19, but it's 20 straight weeks of positive year-over-year data on mortgage purchase application. And just look at the difference here. I'm sorry, it is 19 straight weeks, but it's 20% over where we were last year, same time on mortgage purchase application. You expect mortgage purchase application not to be near peak level in June. Okay, this April 9th being a peak level, that's expected. Okay, April peaking out, March peaking out on mortgage applications, maybe even sometimes earlier in the year than that. But when are the most mortgage applications for purchases going to take place? March, April is as good a bet as any going back in history on when that's going to be. Well, all of a sudden this last week, we had near peak level in June. That's completely out of the ordinary. Rates moved down to 6%. Realtor.com still has their end of the year target at 6%. There are some signals I'm seeing. We talked about shadow Fed president. Lisa and I talked about that on Knowledge Brokers podcast on Friday. If we see a shadow Fed president, that's one of the tools the administration has to try to temper Jerome Powell's power. Jerome Powell, by the way, we're going to talk about the Fed here in a minute. For everybody that believes there's not a little bit of political manipulation with Jerome Powell, I'd encourage you to dig deeper. Guy lives in Chevy Chase, Maryland. Look up who lives in Chevy Chase, Maryland. He encouraged a lot of spending during the beginning of that Biden administration that created inflation. He called inflation transitory. He waited too long on inflation. And now he'd rather, wait too long, I guess, on cutting rates as opposed to being wrong to cut rates. And I get that. I get that hesitation. But there may be one move from the administration, put a shadow Fed president in basically name the successor before May, when Powell's term is up, May of next year, and start to see some of the power shift over to that shadow president who might be more inclined to encourage rate cuts. But we get a rate down to 6% on the 30-year fixed. The mortgage application and the pending home sale data tells us that the future looks very strong on the future of the market in terms of buy side. A lot of things obviously can complicate that. We're starting to see a couple weeks in a row of soft job data. That's one thing to keep an eye on, which obviously that would actually support lower rates. But, if job data gets really soft, are people losing jobs? There's a consideration there. Inflation, the long-term impact on tariffs. We've seen 2 good months that tariffs have actually done the opposite of what was believed by a lot of analysts. And then obviously some of the Middle East news over the weekend could have a greater global impact. What's going to happen to oil? How is America going to get involved in this? And, I'm not making any statements on that. I'm just saying, if America gets involved, then what does that do obviously to global economic risks? And, we'll have to keep an eye on that. But outside of all the craziness, rates are actually trending down the last week or so from where we were at 7%. And the future demand looks really strong outside of something happening that we can't predict, obviously. All right, insurance, homeowners insurance. Zillow has a report out here. Typical homeowner continues to face annual insurance cost increases. And this might be the biggest risk here to homeowners, their ability to afford the property, even those that are locked into a really low mortgage. Insurance costs could create an environment where some homeowners say, hey, I got to scale back on what I own. I got to buy something in a different location, or I need to go and, rent, because rents are cheaper than buying right now. Insurance growth has outpaced homeowner income growth across the nation. Look at this. Income in Miami, 28%. Insurance premium growth since 2019, 57%. In Sacramento, the delta is 24 versus 55. Jacksonville, 24 versus 51. Orlando, 25 versus 49. Tampa, 26 versus 46. So 4 of the 5, there are Florida, and then you got California. You got Florida, California all over the list, as those are 2 states that are really seeing an increase in homeowner insurance premiums. San Diego, 24 versus 48. Salt Lake City, 23 versus 46. Richmond, Virginia, 21 versus 48. Here it is. Raleigh. Vanessa told me, we had a BAMX member said, tell Byron to stop saying Raleigh. It's Raleigh. Okay. So I know now, I don't know. I forget who that was. Shout out to whoever that was. And I apologize. It is Raleigh. Just like Lee. We have a Lee downstairs. I just think of Lee now when I see Raleigh, North Carolina. So Raleigh, I probably still am saying it wrong. 26 versus 43. Atlanta, 21% homeowner income growth versus 47% insurance premium growth. LA, 24 to 44. That probably goes up. Charlotte, 28 versus 40. So smaller gap in Charlotte. And the whole list is here. I'm going to put the report into BAMX into school for BAMX members. So you'll get that. And Jason, it is a good thing. I'm trying to learn my pronunciations better. The typical annual insurance premium has increased by $500 since 2019. Okay. The cost of home ownership for the conversation with a buyer. This is how you're going to get referrals in the future. This is going to be something, this conversation is going to be how you're going to guarantee you get the listing on the other side when you give them really good advice up front. Has anybody walked you through the cost of home ownership? If you really want pride of ownership and you really want, be able to sell a good product in 7, 8, 10, 12 years, whenever you go to sell the property, plan on putting 1 to 2 to 3% of the home's value back into the property. That's just on maintenance and insurance and all these different things. Okay. This isn't upgrades, 1 to 3%, depending on the price of the home, of the value of the home back into the property. The insurance conversation is a real one. Has anybody walked you through where insurance is today and some of the increases that we've seen? It's increased $500 since 2019. Okay. So that's a big jump. Insurance premium growth in Miami since 2019 is $1,500 alone, just in Miami. Okay. Now this is going to impact affordability. So here's currently roughly a third for sale listings in the U.S. are considered affordable. For a household making a median income. Even if insurance problem, and so here's some good news, some silver lining in this. If insurance premiums were to increase by 10, 20, or even 30%, the stock of affordable homes among these currently listed for sale would decline by only about 1% of that third. So about 4,000 homes. Now we need all the affordable homes we can get, but even if insurance premiums increase by 30%, you would only see the affordable home category decrease by 1%. Now, some metros are going to be worse than others. New Orleans is one of those. If insurance were to increase 30% in New Orleans, where 84% of homes in New Orleans have major flood risk, then the affordable listings there would drop by 12%. So across the country, it's 1%. It's different in some other areas. Pool of affordable listings do shrink if insurance rises, but how much? Okay. In Dallas, if insurance premiums go up by 30%, the number of affordable listings fall by 6.7%. So if you kind of want to see where you sit on that, I'll drop this into school here, that chart for BAM X members. All right. FOMC preview. Most analysts, it's FOMC week, it's Fed week. Most analysts do expect no change to the FOMC policy meeting this week, keeping the target range at 4.25% to 4.5%. And they've basically made it clear. Bank of America says Fed has made it clear that the policy rate will remain unchanged at its June meeting. The BOA expects the FOMC to make some changes to the language around uncertainty in their statement. So they'll have a prepared statement on Wednesday, and Jerome Powell will do a presser on Wednesday. We'll extract all the data in the prepared statement. We'll extract the entire hour plus press conference here at BAM, as we do every time there's an FOMC meeting. We'll pull out all the mentions of housing and how they're thinking about the future of the economy. We're going to have that. Well, I guess we won't have that Thursday morning because of Juneteenth. Maybe we'll do a special show. We'll Thursday might be on. We might have to do a special show. My apologies to Juneteenth, but we may have to do a special show because it is the day after Fed. We can't wait till Monday. We're going to have to do a show on Thursday. So plan on a show Thursday. We expect FOMC to make some changes to the language. The May statement said that uncertainty about the economic outlook has increased further. And this is going to be one of the things Jerome Powell is going to talk about. Now, we look at May, and we're like second full month after tariffs, and there was no increase in inflation. In fact, inflation went down. So now what Jerome Powell is going to say and continue to say is that there's too early. It was the second full month of tariff. Income went way up for the U.S. government. Tariff income went off the chart, and inflation went down. So the administration is going to say, hey, the plan is working. What Jerome Powell is going to say, and what he'll probably say on Wednesday, is we need more time. We need more time. This is one of the reasons why there are many that think Powell is playing a little bit of politics here. The summary of the economic projections, March SEP, was pre-Liberation Day. So meaningful revisions to the 2025 forecasts are likely because they do their forecasts every quarter. They think there's too much uncertainty around policy along multiple dimensions for the Fed to do a wholesale reassessment. We think the forecast for 26 and beyond will remain largely unchanged. Goldman Sachs is not making any changes to their Fed forecast and continue to expect the first of 3 normalization cuts in December. Okay, so they don't think till the end of the year. Poly market has it like 50-50 that we'll see a cut in September, followed by 2 more in 26 to a terminal rate of 3.5 to 3.75. An earlier cut is possible if the economy deteriorates, basically labor market breaks, because that's a Fed mandate. We expect, or if inflation continues to surprise on the downside. Remember, Jerome Powell has said that if we get close to 2, we're at 2.4 on inflation. I'll call that pretty close. If we get close to 2, we're going to start cutting. That'd be an indication that they should start cutting based on his previous statements. But they're not doing that because they don't want to. They don't know what's going to happen with tariff, even though we've seen a second full month of tariffs now and inflation continue to move down. GDP projections of Federal Reserve governors and bank presidents change in real GDP. March 2025, projection was 1.5 to 1. I'm seeing Atlanta Fed project GDP for second quarter up over 3%. That's a projection. So obviously the Fed's projection is much lower. If GDP comes in over 3, that'll be an indication the economy is very strong right now. And we'll just have to kind of wait and see what happens there. But that is an early projection that I just saw the other day. So, all right, starting the week out here at 4.416 on the 10-year. That's near low range for the last 30 days. If we look at the last 3 months, kind of in the middle there, somewhere in the middle. 4.416, lower than 4.5, so I guess we'll take that. We have seen some improvement here as of late on the 30-year. Probably don't get much of it today. We were down closer to 4, under 4.4 here last week when we saw some of these improvements, and we got as low as 6.85. We ended the week at 6.89. Mortgage Banker Associate or Freddie Mac's 30-year fixed weekly came in at 6.84. MBA's weekly came in at 6.93. So just been hovering around that 6.9 mark on the 30-year fixed. All right. There you go on your hot sheet here for the kickoff Monday. Go to bambbq.live to sign up for the virtual event coming in July. Free virtual event, third of the year. We do 4 a year. Bammies will be at the end of the year. Bam BBQ. We got Ryan Serhant. We got Leo Perez and Scott from CEO of Experience.com as well. And then we also have BAM Camp Arizona, the only live in-person major event of the BAM schedule here in 2025. BAM Mania will be next year. Different events. So if you want to come to Arizona and experience BAM Camp, go to bamcamp.live. The mid-tier tickets have already been sold out. Keep that in mind. School.com/BAMX to become a member. We'll see you all week. We got to do Thursday this week. I'm sorry. We got to do it. It is Fed week. We got to go through the Fed decision on Thursday. So there you go. There's your hot sheet for today. We'll see you back here tomorrow. Until then, toodaloo.